Hey folks, Rod here for Daybreak Investors, and this is going to be a macro analysis video for this week. So let's start with the S&P 500 with SPY, and for this macro analysis, we're going to use the longer term weekly time frame. So everybody knows already this longer time frame that actually the long bullish momentum that SPY is living against this shorter bearish momentum, right? So this week, what happened this week? We have actually on the last 2 weeks we have a very impulsive rally. So so the uptrend here, it just ripped through. It was very impulsive, and as all impulsive rallies, it's always good to validate a new bullish trend um, with a short retracement just to correct the very impulsive momentum that happened on the SPY. So generally, and we've been talking for a few days now on the Facebook posts that this rally is really giving a lot of gaps, and it's going to be better and healthier to cover those gaps to really be able to validate the rally. So I have two indicators here that I think are very valid for the weekly time frame. So I have the RSI. The RSI, although we are calling for a correction, the RSI is still very positive. So the RSI is over 50 now. So it's pointing at 55. And this is the MACD. So the MACD is actually changing direction. It's about to meet the signal again, indicating another possible positive momentum coming anytime in the future. So this is very positive, and you can also see on the MACD negative histogram, the negative momentum is losing strength on the weekly time frame. And when we see the Nasdaq here, so this Nasdaq not only got a very impulsive rally, but look at the bearish trend. The Nasdaq just went above the bearish trend and never looked back. And same thing here on Nasdaq. In order to validate this very impulsive rally, we need to have a retracement, go back and cover some of the gaps that were left on the daily. So there were some gaps here that were left on the daily time frame, but going back real quick to the weekly time frame again. So the Nasdaq, although it's important to get some quick retracement to validate all this impulsive rally, we are seeing also so the RSI is at 60, and it's still a long way from being overbought. And same thing is happening here with the MACD signal slope is actually changing to positive, indicating that's about to meet again the signal line, and the negative histogram is actually losing its strength as well. So the Dow Jones Industrial Average, we see kind of the same thing. So a very impulsive rally. So Dow Jones, the RSI is at 52, the MACD the same thing. So if we make it bigger now, you see that the signal line took a sharp turn here on October 23rd, and is indicating this is going to meet again the signal line. And when you see the histogram, the negative histogram is also losing a lot of negative momentum on the last 2 weeks. Okay, now the moment of concern. Now, the biggest concern now on the market is the IWM, the Russell 2000, the small caps. So since January 2022, the IWM is being very weak. So you see this negative regression to the trend line. Although IWM found some very significant support on this 163, 162 zone, the IWM also have been trending on the 50% line here on this long-term Fibonacci. So you see the price is kind of dancing around, sometimes finding great support on the 0.5 Fibonacci, and it's still on top of the golden ratio. But even though we have this positive outlook for IWM, we can't deny the fact that it's been now for many weeks going through this negative regression momentum, or should I say this weak regression, long-term regression, I should say that. So although so 2 weeks ago, so on the week of October 30, the IWM had a very, very positive momentum, but the next week, the momentum was pretty much lost to the half, although there is some sort of a hammer candle here. This is a momentum for concern, regardless for IWM. IWM must, so there is a negative trend line, and it's very, very sharp negative trend line here on IWM. So we can kind of draw like that. This is a very, very negative and impulsive bearish trend on IWM. And although it tried to close above that on the week of 23rd of October, it kind of found its way back again to this very negative bearish trend that we've been seeing since July 31st. So now let's talk about a little bit of the catalyst that we are seeing this week. So if we get the economic calendar, right, we're going to have the CPI. So this is going to be a big, possible big catalyst on November 14. We're going to have the PPI on November 15, the initial jobs claims, so on November 16, and on November 17, that is going to be the greatest catalyst. We may have a possible government shutdown here on November 17. Keep in mind, remember that the Democrats and Republicans couldn't reach an agreement about funding the government, and they push they pushed the agreement to November 17, and we only have until November 17. It doesn't matter really where you are on the political spectrum. If you are a Republican or Democrat, a government shutdown is really dangerous for the economy, for the debt, and is a sign of confusion. And the market and the world really doesn't, they really don't want to see the leading world economy not agreeing on how the government is going to be funded for the next year. Two other things that happen, unfortunately, here on United States is that the Moody's agency changed the outlook for the US debt. So this is not really something that we want to hear, although I personally find the Moody's agency quite corrupt, because this is the same agency that gave a lot of mortgage-backed securities, very rotten mortgage-backed securities in 2006 and 2007, A grade, when everybody knew those mortgage-backed securities were actually really bad, and nothing really happened to any of the Moody's executive. The CEO resigned, but got a golden parachute. But this is something that nobody wants to hear about the performance or the health of U.S. economy. And the last time it happened, when Fitch downgraded back on August 1st, what happened to the U.S. economy, right? we had a scenario here on the S&P 500. This is exactly, actually, I didn't put, okay, so this is August 1st now. We had a gigantic downtrend that may not have been caused only by this agency Fitch downgrading again the long-term debt from AAA to AA plus. We also had Michael Burry, the big short guy, also buying $1.6 billion of put contracts against SPY and the triple Qs. And Michael Burry had this help from the Fitch agency to really cause this 10% retracement on the market. I don't think that Michael Burry was extremely successful because put contracts have time decay attached to them, and this downtrend actually was actually very choppy, the downtrend in the end. And right now, what's going on with SPY is that look at the RSI. The RSI is totally ignoring what we've been calling a small correction to fill those gaps, right? So to validate this bull trend, we got to try to close on this gaps, and it doesn't it doesn't look like it really wants to do that. Okay, so guys, this pretty much explains that we're gonna have a rough week ahead of us. The government shutdown is I think is one of the biggest concerns. The Moody negative outlook is also concerning. I don't know how the market's gonna look at this, because the Moody's agency lost a lot of credibility. I hope the financial industry is gonna look at this on a suspicious way, as it should be. But anyway, we got to keep following price action. And back to the S&P 500, what you're seeing here is still a very positive momentum. And although is again desirable to have a quick retracement here to validate this whole thing, if we go back to the daily time frame, we have a few support lines here on the 430, on the 4. So it is intense, right? The 420 and the 410, and also we have this positive sloping bullish trend that's been going on for a year now. Anyway, I think this is all we have for today. And I hope everybody, look at this as not only not as in a bad way, but there are challenges, and those challenges may be able to actually produce the negative momentum we're expecting to validate again the positive momentum to end the Q4 on a positive note. Anyway, guys, Rod here. Thanks for watching. Have a great week and happy trades. Thank you.